Welcome to our market outlook. First of all, let me start with a brief review. Last day, Indian market surged sharply in response to the RBI's rate cut announcement in the first half of trading hours. The additional 25 bps reduction in bank's cash reserve ratio surprised the market positively and lifted the Nifty briefly above 6,100 mark. However, these gains did not sustain as the central bank's statement on future rate cuts tempered expectation. From the new 52-week high, benchmark indexes gave up gains to end down 0.5% on profit booking, as the market had already factored a 25 basis point cut in repo rate by the Reserve Bank of India. At its third quarter review of monetary policy for 2012-13, the RBI cut the repo rate by 25 bps to 7.75 with immediate effect, and CRR by 25 bps to 4% effective from February. Bank Nifty ended down 0.5% after rose 1% after the RBI's move to cut the repo rates and reverse repo rate and CRR. While the Reserve Bank of India's decision to lower repo rate and cash reserve ratio of banks has lifted investor sentiment, economists have lauded the central bank's pro-growth policy stance and are now betting on future policy easing. Barring an upside surprise on inflation in the near term or the fiscal deficit during the budget, the RBI will likely cut a repo rate by 25 bps after the release of policy. After the much-awaited policy meet, the NSE Nifty ended 6,050 mark, which was down 0.5% from Monday. Sensex closed at 19,990, which was down 0.6%. Advanced decline ratio was negative on the NSE. 932 shares were entered in trade and 470 shares advanced. The volume also rose from the Monday's volume. Rate-sensitive stocks, which had risen sharply after the RBI announcement, witnessed a profit booking to its close. Most public sector banks fell sharply, while several private sector banks managed to buck the weak trend. Bank of Baroda down 2.7%, was the worst hit on Nifty. Axis Bank was the top gainer on Nifty as it ended up 4%. On strong response to its qualified institutional placement of shares. ICICI Bank also gained nearly 1% to end at 1,200 rupees. ITC ended 1.5% higher on defensive buying. Among the laggard, Century Textiles dropped 4% after posting October-December consolidated net loss of 291 million rupees compared with the profit a year ago. Dabur India also slipped 0.6%. Disappointing October-December earnings dragged down Sterlite Industries India 0.7%. The other prominent laggards were Reliance Communications, IFCI, Indiabulls Real Estate, and IBRCL that lost 3 to 9%. Index majors such as Reliance Industries and Tata Steel also fell 1 to 6%. Coming to today's outlook, market is expected to be choppy today as traders roll over position to the next month future contract a day ahead of the expiry of the January derivative contracts. However, the underlying sentiment still remains positive after the Reserve Bank of India reduced the repo rate and CRR by 25 bps points each and indicated a decisive shift to more pro-growth policy stance. The rate cut will benefit the entire financial sectors, more so for Yes Bank, IndusInd Bank, Canara Bank, and Orient Bank of Commerce due to their higher reliance on bulk deposits. Owing to declining interest rates, implementations of reforms, and the stable to improving asset quality and higher upgradations and likely capital infusion in banks may provide some confidence in banking space. Among public sector banks, one can consider State Bank of India, Bank of Baroda, and among private sector banks, one can bet on ICICI Bank, IndusInd Bank, and ING Vysya Bank. Last day, shares of Crompton Greaves disappointed with its estimates results. So today also we can expect some more extension in its profit booking or a weak sentiment. Analysts had estimated a net profit of 642 million rupees in this company. Idea Cellular also fell on profit booking after the dismal result. Today, major results from Balrampur Chini, Central Bank of India, Colgate, Palmolive, Dena Bank, and Indian Foreign Case International, National Aluminium Company, Power Finance Corporation, and PVR and Titan Industries will announce. And the global market is likely to provide a positive note today. Asian markets are trading positively, tracking gains on Wall Street, but a caution prevailed before the outcome of the U.S. Federal Reserve 2 days meet, which is due today. Investors are looking for a clues on duration of the central bank's bond purchasing programs. Technically, the Nifty spot yesterday made a high of 6,111 and close below that psychological level of 6,040, which takes the sentiment some negative. But we have already mentioned that the rally may end at 6,120 range in the Nifty future. Last day it happened and exactly Nifty future touched of 6,120 and witnessed a profit sale. Technically, as our expedition rally got exhausted at 6,120 in the Nifty future, we have been advising that if RBI policy comes with a positive surprise, we can expect a move up to 6,120 only. So last day, Nifty future hit that range, exactly that range, and witnessed a major correction from that range. So in today's trading and the coming trade also, we can expect the extended or likely extension of profit booking, and it may drag the Nifty up to 6,000 range, or in the worst case it may touch up to 5,950. So in this situation, one can accumulate good stocks mainly from the banking space to get more returns in this year. That's all from my side. Thank you. Have a nice day.